Hey traders, what's up? Jamie Saettele here. It is 10 a.m. where I am, March 16, 2022. Again, Jamie Saettele here with Scandinavian Capital Markets and SB Trade Desk. So, really boring markets out there, right? Kidding. I'm actually going to start today with dollar Swedish krona. So, we'll start with a really long-term chart, and this is one that we actually looked at last week. I'm going to bring it up again and start with it because I think it's super important. So we have here, essentially call it the life of currency pair channel, if you will. And again, what's important to understand about not just this chart, but I'm getting told to share the screen. I totally forgot to do it again. Here we go. All right, we should be good now. So here we go, dollar Swedish krona. So yeah, I'm starting with this chart, and we looked at it last week, but I'm starting, with this for a reason because it is super important. So one of the posts I wrote last week, the theme was to keep an open mind. Okay. Well, this is let's call it the life of currency cross channel, if we will, right? So it's based on a trend line that starts back in 1975. All right, we crossed lows in the late 70s, the early 80s, 2008, getting a little closer to home, 2011. And if we look at the center line of that channel, or the median line, you can see that we have some pretty important price action that occurs around it. So the big high back in December 2016, right? And we got bearish on the dollar generally because we hit it again last week. All right. Now, here's the thing. I don't pretend to know what's going to happen. I'm bearish into this level because it's resistance, right? A level's a level until it's not. Resistance is resistance until broken, support until broken. And then you look for the alternate, the opposite to happen. So my point being is that we hit a massive, massive resistance level, and we're coming off of it, coming off hard. If, however, we were to break this level, that would be, probably pretty scary for every other asset class, but you'd have to be extremely bullish dollar SEK and by extension, probably the dollar in general. So let's go a little shorter term here. Let's go to a daily chart. All right. So this is the daily chart, and this is the fork, for those of you that think I'm talking about dining where I'm not. I'm talking about Pitchfork, which is a tool, a channeling tool used in technical analysis. And this fork, right, has nailed pretty much every pivot over the last roughly a year, okay, save for this little piece here in October, November of 2021. And you can see that we hit the top of that parallel, right? Reversed. And today's action is really important. So we have FOMC today, but we've already cracked this. So if we were to crack this, on a closing basis, that'd be extremely important. And here's why. You can see, look at how precise all these resistance levels were, right? Right there, right there, right there, right? Even the other day, 2 days ago, we reversed off of it and bounced. So what I'm saying is, if you're watching this and FOMC has not happened yet, watch yesterday's low, okay, for resistance if we do get a dollar bounce on FOMC. And I'm going to go into a 4-hour chart here just so you can see how precise and clean that resistance level was. So this really is the essence of technical analysis right here, right? levels, support and resistance. Former resistance becomes support, right? And once broken, that support becomes resistance, that resistance becomes support. So most people do think about, when they're looking at charts, they think about support resistance, like you have resistance, support, market goes like this, right? It doesn't really work that way. Usually markets trade on a plane, whether that's an uptrend or a downtrend, and they go like this, right? Sometimes you get that horizontal range, but most of the time you don't. I mean, think about it. How often do you see just a market trading in a straight flat plane for an extended period of time? So this to me is a very useful chart to pay attention to. Very timely right now, and then that longer term chart we looked at before. So again, pay attention to this today with FOMC. Resistance up here, let's call it 955, 956. And then your big level to pay attention to on the downside is going to be this lower parallel, which is pretty much in line with these former highs here, right? And that's really when it all comes together, when you have what we call a parallel support or resistance on an angle along with a horizontal level, right? Former highs and former lows. Okay, so what does this all mean for, say, euro? So we are currently trading 10.15. Here's what, this was yesterday's little piece here. I'll just read it out. So, right, it's been a little over a week since euro made the low at 108.06, right on the trend line from the 2017 low, right? Here's that 2017 low trend line. Pretty simple. Connect 2 points. Hit that level. Okay, the pullback from the 310 high appears in 3 waves, and price has held the 618 retrace of the rally from the low. So, we're on an hourly chart now. So this is what I mean by that, right? The pullback appears in 3 waves. A, B, C, right? And we've held the 618. So take your retrace, 618, 109.26. We've pretty much held that. In fact, the low, I guess that was yesterday, was spot on 109.26. Point being, there are actual reasons to be positive or constructive, if you will, on euro. I know that some news just came out about Ukraine and Russia, and there being, the possibility of some sort of, peace agreement, if you will. And that's fine from a humanitarian standpoint. That's please, I hope that happens. But however you make your decisions, right, you got to be consistent. I don't make my decisions on that. I'm not privy to that information before anybody else. I can do, look at these charts and identify levels and manage risk in that manner. So again, let's go over the evidence here. We hit a trend line that goes back to 2017. We had a pretty strong rally, which, you could claim is kind of impulsive, right? It's not perfect. And then you had a 3-wave pullback, which is corrective, and you've held the 618 retrace. So heading into FOMC with all of that makes me, kind of think higher in euro, if you will. And the level to look towards in the very near term, right, is probably like 112.15, 112.30. So this orange line here, this thick orange line, that is 2022 VWAP, which means volume weighted average price. And that is right there, where you also have 2 legs up from the low, right? Also, you've got former support here, so nice horizontal level. Also, by the way, it is the March month open at 112.18. So, that's a sticky level. Like I like to call it kind of a magnet. If we get there, it'd probably be a spot where you want to, take some off if you have some on the long side. But we are trading right at the key kind of breakout level, if you will, at 110-ish, 110, give or take 10 or 15 pips. And here's why that's a key level. So you can see, if you can see this like magenta bar here, it has like, you know, little dots going across. That is when you have a very high volume level, right? So that is 110.11. This is futures, but I use it as a proxy for spot. So that was a high volume level. As you can see, it was resistance. And not coincidentally, we just made a high volume level at the exact same place. So there is something going on around 110, you know, 15 or so. Elephants in the room playing right there. So yeah, we'll see what happens with FOMC, but you know, to be call it a kind of a line in the sand, right? 110.15, bullish above, very cautious below. If that makes sense. All right, so let's move on from euro. This is I spent a lot of time here on dollar, SEK, and then euro, because this is really my focus is heading into FOMC later today. Let's take a look at pound, which I have zero interest in at the moment, but I will show you it anyway. Okay, so to me, this is total no man's land. Like, here's the fibs from the March 2020 low, right? That 38.2. It's also coincided with this December 11th, 2020 low. We bottomed there back in December of last year, right? Just 3 months ago. Kind of thought that would have been a low. And then we've broken below. So at this point, again, I have zero interest in pound unless we trade down towards either this parallel, which is a channel, okay, from the highs back last year. That's going to be about 29.50, or an even better would be if we can test the blue line here that crosses the lows from July and December of last year. And that's going to coincide as well with the 50% retrace, which is not a fib, but it is still a useful point of reference. And that's going to be about 28.30. And that also, by the way, is in line with some good horizontal levels. So again, no interest in cable unless we trade down towards 29.50 and preferably 28.30, right? Until that happens, you've got resistance up around 32.40 to roughly these lows at 32.70. Right up here. And frankly, the more I'm looking at this, the more it kind of makes sense that maybe we get a rip, because that's the 38.2. This would be a 1, 2, 3, 4, and then final stab to the downside in 5. I'm going to call an audible real fast, and we're going to look at some seasonal studies. All right, so here's some seasonality. DXY, okay? After last week, the longest term study, 30-year study, does turn down. Shorter term studies, 5, 10, 20, do hold up until basically throughout the month. And then you kind of go into a real bearish seasonal outlook throughout, really throughout until the fall. Pound seasonal study. Turns very bullish. So again, I say I have zero interest in cable at the moment, which is true. I would love if we get a final dump into that 28.30 level, because heading into the seasonal turn window would be just a beauty, right? Aussie and Kiwi, So after next week, or sorry, after this week, this is updated as of last week's close. So after this week, we actually go into a very, very positive seasonal, tendencies, as I like to say, for Aussie. Kiwi, same deal. So yeah, I did want to bring that for. I don't know if we've ever actually looked at seasonal studies in these webinars before, but it's important to note that you do get several big seasonal turn windows throughout the year, and we are kind of there right now, right? Okay, so that was cable. Let's take a look at Aussie. All right, so 4-hour charts. Constructive Aussie. Simple reason is frankly just the fact that we hit this trend line, right? I actually think, yeah, I've got one marked up here. All right, so go back to this high from, what was that, March 6th, 2 legs down. So you get 2 equal legs down. We just kind of ran into a little bit of a wall here right before I started this webinar. You can see the well-defined horizontal level. But yeah, I'm constructive Aussie, and frankly, constructive against this low from, I guess that was just 2 days ago. You've got a lot down here. So you got the trend line, you've got 2 equal legs down, as I noted. You've also got 2022 volume weighted average price. So as you can see, this level didn't do a whole lot, wasn't all that useful, the VWAP, up until really, that was a Sunday night, after Russia had invaded Ukraine. That was the 27th, and we opened on it and ripped, and we just came back and tested it the last 2 days. So I don't know, constructive here. There are much longer term charts that would warrant kind of a constructive view on Aussie, notably this one. So this is a channel, goes all the way back to the 2011 high. And the parallels within this channel, right? It's a theme that, if you read my stuff or watch these webinars, you'll notice I talk a lot about former support becoming resistance and all that stuff, and on an angle, and that's what happened, right? So this was resistance, became resistance again, and really since August of last year, it's been support. So that's an important observation. Right, so on a very long-term basis, again, this is a weekly chart. As long as you're holding this, it's okay to be constructive Aussie. You break this, then look out below. You're going like, probably mid-64s. All right, Kiwi. We just nailed resistance. This is an hour. Let's go to a 4-hour. All right, so Kiwi just hit resistance. Very short-term channel. Right? It's just like last week or so. I do like Kiwi. You've got this, kind of nice little bottoming look going on here. I don't know, maybe you need to do a bunch of work on the right side if you want to make a big head and shoulders bottom. I'm not here to predict that. What I am saying is that if we rip through this, right, then watch for kind of a bullish signal, watch for support from the top side. The key level, and we've looked at this for months, is this line here. So again, this is going to be log scale, by the way, if you're drawing this at home. Connect these highs back December 2019 high, these highs back here in the fall of 2020, and look what you get. Support, resistance, resistance just last week. So that is your, clearly your important level, right? Kind of stuck between a rock and a hard place with Kiwi on this. But yeah, it's been, the relationships between various asset classes has been kind of odd. I mean, has not been easy. And this is, also why I like to say that it's best to just study that market that you are trading on its own technical merit always. I mean, if you were to, look at, if I were to tell you that, the Chinese equity markets would be down where they are, you would tell me that Aussie's trading at like 40, right? Not the case. FX vol has been, pretty muted through all of this. We've picked up a bit lately, but not nearly what you would think. Okay, dollar CAD. Last week I said I have no idea, and I still have no idea. Really stuck in a range, and we're doing that, until we break out. From my kind of just my eye, if you will, everything since the June 2021 low, really looks like a big A, and then everything since this high back in August is a big B wave triangle, right? I still think that's a distinct possibility. It does not jive, if you will, with my bearish bent on the dollar in general, but maybe that's totally wrong. And if that's the case, this might be the place to be in terms of playing a big move higher in the dollar. And again, that's not a prediction; it's just an observation, right? So A, B, C, D, E, or maybe all of this is E. Either way, I'm kind of respecting this idea that we have a big triangle and that we have the possibility of bursting higher in dollar CAD as long as we hold this trend line back to the, it goes back to the low from last year, right, from last June. All right, let's go to dollar yen, which has broken out big time. So weekly chart, we looked at this last week. So we are above the trend line. That is the 1990, 1998 high, which was resistance back in 2015. Let's see where we close this week. But right now, folks, we are above that level, and we are about to tag the 2016 high, right? So if you recall, this is when Trump was elected, right here. We ripped face for like 4 or 5 weeks. We put in a big top. This could be quite a significant breakout, right? I don't want to minimize that. And what's interesting too, and I don't know, maybe we should have seen this coming, is the fact that when you had that gold rally, right? Gold was going through the roof. Typically, right, you have gold and yen trade, somewhat in unison. They have historically, more times than not. And dollar yen was doing nothing. So once gold started to come off, dollar yen went bonkers on the upside. So yeah, this could be a massive, massive breakout. That's kind of, I'll just leave it there. As far as trying to time like an entry, go to a shorter term chart here. So here is a 4-hour chart. Actually move that over. So let's go to a daily. So this is a channel. Here you go. All right, so as far as trying to time this, one, I do think you're coming into resistance again from that high in December 2016, which is what, 118.66 or something like that. But if you use this, if you draw this channel in from the low from Jan 2021, you're coming up on resistance here from this parallel, right? More in line, more so in line, or more or less in line with that 118.66. But watch for support if you do get a pullback level to try to align with this bigger breakout. If that is what it is going to be the center line here. Okay, and you can see why. I mean, it was just resistance like a month ago. And that's going to be, I don't know, like 117.20 or so. And again, I'm not saying we pull back and then rip. I'm saying if we do pull back, that's the level where you want to get involved, at least the way I do things. you know, there'll be times when you get breakouts and you're waiting for a pullback that never happens, and it sucks. But more often than not, you do get an opportunity to join the trend or the breakout, if you will. All right, so we've gone through the majors, G7. Let's take a look at, I guess we'll look at the metals because we just kind of talked about that. So everyone got real excited about gold and silver, didn't they? Not gonna lie, I kind of did too. And frankly, I thought if we pulled back that we were gonna hold this like 1920 level or so, and we did not. So what's interesting here, folks, is that this day right here, 224, terrible circle. Here we go. Right here, that was the day where so Russia invaded Ukraine on the 23rd. The next day here was the trading day. We closed that day at 1904. Guess what? We just traded like 1904. So essentially through all of this, we haven't gone anywhere, believe it or not. At this point, I am an observer. I have no interest in messing around with gold. It has not held the level that it needed to, in my opinion. I will note that the 50-day average is a spot to pay attention to, especially because it coincides with the high back here in November. That's going to be 1870s. So if you get that, that might be an opportunistic spot to do something. Silver, again, just a beautiful channel going back to 13 months ago, February 2021. We broke out, and that breakout did not hold. So again, the way I do things, I can't be involved because this has failed, right? Next level to pay attention to is probably that 200-day average, which, as you can see, was pretty good support, resistance, 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 and in fact, extremely precise. And that's currently 2405. So that's the next spot to potentially do something. All right, let's take a look at indices. So NASDAQ was the chart that we looked at and focused on last week because of this line back to the November 2014 highs that connects all these highs, right? 2018, 2020, then it became support. And here we are holding up. Nice reversal yesterday. So I still stand by my call, if you want to refer to it, you know, as that, but, or my opinion, that we do work higher, potentially all the way back towards, you know, 15 twos, 15 threes. First level to pay attention to, of course, is going to be this 2022 VWAP, which this has been just a beauty all year, right? So all that is volume weighted average price. It's a moving average weighted by volume for each period, in this case, a daily chart. As you can see, it's been resistance on each little move higher. So clearly pay attention to this. Currently, it is 14,543. S&Ps. Also, real quick, so if you look at NASDAQ here, you can see how we actually cracked the lows barely. There's 224 lows. S&Ps have held up. They actually did not make new lows. So you got a little non-confirmation there. And we are quickly making our way into the big test for resistance here for S&Ps. And that's going to be the line that crosses the highs. So January and February highs. And then again, 2022 VWAP for S&Ps. And that's 43, call it 43.91. Okay. Okay. Other stuff that might be of interest, like non-dollar crosses. This is one that I think is interesting. This is Euro Aussie. This is an hourly chart. Channel off the lows. We just hit it this morning. I don't know, just an interesting spot. Me personally, I kind of stick with dollar crosses and play my opinion or view, you know, on those. And if I end up kind of in a, you know, a cross trade, like say I were long euros and short Aussie, then I am synthetically long euro Aussie. But it's just an interesting price chart here, right? Especially given the big reversal we had, which I will show you right here. So we did have we looked at these signals last week, but we had these are proprietary reversal signals with a volatility component and a momentum component. And we had a big reversal last week. You can see a little blue bar here. So if you look throughout Euro Aussie history, we've had some pretty good signals for this. So I don't know. Interesting spot. Dollar SEK did the same thing. Right? Dollar Swedish krona, reversal signal here. We've actually had a couple over the last 2 months. But yeah, this is kind of my objective reason, if you will, to be kind of dollar bearish at this point. But yeah, I will be paying very close attention to that dollar SEK chart, that very long-term one, the first one that we looked at. Because if you do break above that long-term median line, oh boy, look out. All righty. So I think I'm back now. It's been a pleasure. Again, FOMC here in like, I don't know, was it like 3 hours, 2.5 hours? And, you know, we'll see what happens with all of this wild geopolitical news. But, you know, try not to make your decisions based too much on the headlines. I mean, you just saw this Ukrainian-Russian peace thing come through, and what happens? Euro spikes 110.40. Now we're trading 110, right? So again, trade the charts, trade the levels, and now's a good time, I guess, for me to bring up. I will share my screen once more, but at Scandinavian Capital Markets, we are looking for trading talent. So we've revamped our, well, at this point, probably, I don't know, 6 months ago, we revamped our proprietary trading program. And if you would like to, you know, become a professional trader and trade with us, visit this page, okay? We are funding up to $2 million. There is an assessment fee, right, that you got to pass the assessment. If that happens, you get funded. There is no time constraints on making, you know, passing your assessment fee like other places. But yeah, check it out and come trade with us. So again, that's it for me today. FOMC today, good luck. Jamie Saettele here signing off with Scandinavian Capital Markets and SB Trade Desk. Take care.